The final question I pose to you is that no one can predict the economy over a 20-year period. How do elements like the forecast on inflation play into the investment for the various year packages, and what other factors do people need to take into account? And just extending on that a bit, is comparing this to what would be a corporate bond. A 20-year period would seem very risky. What if one of the companies in the portfolio goes out of business? So if you could just comment on the term of the bond and how that impacts and what other elements play into risk.
I would just say, yes, 20 years is long, and the longer you go out, the more risk there is, the more unknowns, as Nigel mentioned about unknowns. And, again, I can't help but go back to recent history in Jamaica and recent history present in Barbados, where I don't think 20 years ago Barbadians thought that this is where they would be. And so while to us in Trinidad, God is a Trini, right? So we don't think these things can happen to us. But I think that's really not the kind of position that I like to propagate, because I'm sure Bajans and Jamaicans probably think God is a Bajan and a Jamaican too. And, we're all blessed in our own ways. Now, I was kind of surprised about the 20-year tenor on that longest bond. And who knows what can happen. That's my position. I think in 20 years, anything can happen. But I leave it to these gentlemen to enlighten me.
Go ahead, Brent.
Okay, well, the 20-year bond, yes, the risk is going to be greater as the unknown, the uncertainty. But there are institutions like life insurance companies, pension funds, that could match their liabilities with these assets, these long-term assets. So that is going to be for them. The retail investors should look at the 5 to 12-year tenors, where it's more manageable in terms of time and risk, but leave the 20-year to the institutions who will find greater use for it to match their assets with their liabilities.
Exactly, and I think that's the bottom line. Insurance companies, pension funds have 20-year, 40-year, some 50-year liabilities that they can match these investments to their portfolios. So the 20-year is not for the individual unless you're a very wealthy individual and can live off the interest income.